In the last 100 years of gold history, this has never happened. Gold has gone up by 100% in just 18 months of period. All the economists, all the fortune tellers, all the babas, nobody really could predict gold's bumper rally that we have seen. Now people are divided into two camps. Camp number one is people are saying that gold is going to cross 1.5 lakh marks by the end of 2025 and it could very well cross 3 lakh marks by 2030. I'm not saying that. This has been published in New York Post and one of the mining executives has talked about these ranges. The second camp says that, you know what, gold has gone all-time high. It's a crazy rally. Gold is going to fall and it is going to correct from here on. Now, if you're totally confused in terms of whether to buy the gold or wait for correction or actually sell the gold, this video will help you because I'll speak about a lot of data points that will give you a right perspective on gold investing. I will also reveal to you exactly when I would buy the gold, so that you understand the logical entry point. And lastly, I will also speak about how will I go about investing in gold. So a super interesting video, continue to watch this. Just before I start, a big shout out to the partners of this video, Odoo. Odoo is an all-in-one management software that offers various applications for entrepreneurs such as invoicing, accounting, project management, website creation, and much more. Beauty is that all these applications are brought together on one single platform so that they can communicate with each other seamlessly. One such app that you can get absolutely free for lifetime is CRM. Within the CRM app, you can track your customer opportunities using the cards on the Kanban view. All the key information about your customer opportunities, for example, priority level, revenues, everything is shown in that Kanban view. You can arrange these cards in different stages of their pipeline. By simply dragging these opportunity cards, you can move your customers across the pipeline and convert them from new to qualified to won. Within each opportunity, you can plan various activities such as calling, meetings, mailings, etc. You can also send emails and log notes so that everything is in one central place, giving you efficient management. Once you have deal logged in, you can create beautiful quotations in just few clicks, saving you time and efforts. The best part, your first app is free for lifetime. Check out Odoo today. The link is in the description and in pinned comments. Coming back to gold now. 100% rally in the last 18 months. $2 billion questions now. Number one, where could gold reach by 2030, which is, let's say, 5 years down the line, slightly longer term view, where could gold go? Point number two, or question number two, where could gold reach in the next 12 months? So by 25, 26. So first, let me speak about where could gold go by 2030, which is slightly longer term view, 5 years view. For this, we need to understand who actually is buying the gold. And more importantly, can they continue to buy the gold? If they continue to buy gold, then gold prices will continue to go up in the future. Very, very simple logic. So let me break down who is actually buying the gold and can they continue to buy or not. So first buyer of gold is private investors. Have a look at this chart. What you see here is how much of money private investors have pumped into gold ETFs. And have a look at this data in 2024. So between January 24 to November or December 2024, total gold buying happened through gold ETF was $7 billion plus $10 billion, around $17 billion. Now look at the 2025 data as of September 2025. In these 8 months, already $64 billion worth of investing has happened through gold ETF. This is almost 4 times. Meaning that private investors in 2025 have hoarded the gold using gold ETFs. Please understand that this is not bought by government. I'll come to central banks in a minute, but this is bought by private investors. And more interestingly, if you see these blue bars here, these blue bars show you how much of gold ETFs have been bought by North Americans, people living in America. And to my surprise, in 2025 alone, if I do the sum of these blue bars, it very well reaches more than $30 billion, meaning 50% of total world's gold ETF flows have come from America. Why is it that private investors in America are buying gold? There are 4 broad reasons. Let me quickly walk you through. Number one, ongoing trade policy and geopolitical risks. These are introduced by Donald Trump. One day he says that I'm going to slap India with 150% of tariffs. Next day he says Modi is my friend. He has caused ongoing trade policy issues right now in the world, and therefore private investors are flocking to gold. Point number two, dollar is weakening like anything. You go and look at the dollar index, it's mind-boggling. That is why people are moving into gold. Third, expectations of lower bond yields because of the cut cycle, rate cut cycle that is going on in US. And number four, which is more interesting, is the momentum. Whenever few investors buy gold, gold prices go up, more investors join to buy the gold. And that is what is precisely happening. Private investors are hoarding gold like anything. increasing in US, across the world. Will they continue to hold or not? I'll come and present to you some mind-boggling data. But before that, let me come to buyer number 2, which is the central banks. Now see this chart. Blue bar that you see, that is showing you how much gold central banks have bought. And the purple bars you see how much of gold central banks have sold. And what you see clearly here is that in 2023 here, if you see these blue bars, central banks bought a lot of gold. This was the highest gold activity done by central bank. But if you look at 2025, central banks have not bought a great degree of gold. So if your friends are telling you that the central banks are the ones who are driving this crazy rally, that is not true. They did that in 2023, not in 2025. In 2025, gold rally is mainly driven by the private investors that we saw in the previous chart. Central banks actually have not bought a lot of gold in 2025, but they may continue to buy more. So in 2026, 2027, they may buy more. Who knows, right? More importantly, have a look at the countries that have got the gold. Poland is number 1 country that have bought more than 70 tons of gold alone in 2025, followed by Azerbaijan, Kazakhstan, China, Turkey. These are the 5 countries that have hoarded the gold like anything in 2025. India have got some gold, not more than 2 or 3 tons. But if you look at these countries, Russia, Indonesia, Singapore, Uzbekistan, these countries have been selling the gold, and I think they will regret this now. Now, the reason I have shown you these 2 data points is we can draw some long-term trend from this particular data. Have a look at my screen, and what you see here is that private investors and central banks, as of now in 2025, still remain under-invested in gold. Let me summarize this data beautifully to you. Have a look at the pink chart first, pink line that you see here. This is showing you how much of private investors' wealth is invested in gold. And if you look at 1980s, around 8% of their wealth used to be in gold asset. But if you see, since 1980, it has been coming down consistently. In 2010, 2012, 13, it was at lowest point. But since then, it is going back up. And if you see in 2025, it is still only 3%. 3% of their total assets is in gold, and the trend is now reversing, meaning that it is entirely possible that in the next 5 to 10 years, private investors continue to buy gold because they might get to, let's say, 7%, 8% of their assets into gold. Now let us focus on the second line, which is the brown line here. And this line represents what proportion of central banks' assets are in gold. And again, 1980s, if you go back here, you will note that central banks, around 60% of their assets used to be in gold. And consistently, it has been coming down, coming down, coming down. Now in 2025, there is a big reversal that is happening. Right now, they are at around 20%, 22%. It can very well go up to, let's say, 40%, 50%, 16%, given the uncertainty in the world, given the macroeconomic conditions are weak, given that the geopolitical risks are very high. Central banks may continue to hoard more gold, and their total allocation to gold might go up to, let's say, 40%, 50%. So both private investors and central banks may continue to buy gold over a longer period of time. Again, I'm talking about the long-term view here, 5 years, 7 years, 8 years view. I'm not talking the short term. So in my view, gold remains a strategic asset when it comes to long-term investments. However, there is a but here. You really need to be having some caution right now, because the short-term trend of the gold is now, I'll show you some mind-boggling data. In short term, gold may very well correct. Let me show you the data point. What you see on my screen is whenever gold buying in the world has gone up to, let's say, around 1300 tons, gold buying stopped. For example, in 2009, 2011, if you see these 2 lines here, you will note that as soon as gold buying was getting closer to 1300 tons, all of a sudden the buying stopped, selling started, right? Again, have a look in 2017 here. It was almost about to touch 1300 level, but then it dropped again. If you look at 2021 as well, gold buying was about to go to 1310 and it started to drop. In 2025, almost 1250 tons of buying has happened, and it might come down. That is what the history is telling us. So right now, if you ask me, short term, 6 months to 12 months, gold is overbought at the minute right now, and there is a good chance of correction. Again, I could be totally wrong here, because I am reading a chart here which is showing me last 20 years of data patterns. The second more important point that you need to understand is the 200-day moving average. Again, focus here, very, very simple logic I will explain to you. What you see on my screen is the gold price chart that you see in the form of candles, and the line that you see here, the blue line, that is the 200 days moving average. What is it? If you take today and go back to 200 days previous, and if you do the average gold price and you draw that blue line will come here, right? Now what you see here is that currently gold is trading, maybe since let's say October 2023, gold has been well above the 200-day moving average. And whenever that has happened for a longer period of time, gold prices have corrected. Let me show you with some data proof. So for example, if I come back here, okay, have a look at this period between 2009 to almost 2012. What you see here is the gold prices were well above this blue line, meaning that for almost 3 years, gold prices were stacking much above than the 200-day moving average. What happened afterwards? We saw a huge correction in gold. Can you see this? And eventually the gold prices started to trade well below the 200-day moving average price. This is one example. If you come back again here in 2019 or 2020 COVID period, so let's have a look at this again. Here in 2019-20, gold prices again went up very high as compared to the 200-day moving average, the blue line. What happened? Afterwards, again, there was this steep correction that you see here, sideways movement. Eventually, the gold prices came down below the 200-day moving average. So in my view, whenever gold prices will come down to the 200-day moving average, that becomes a good entry point. And personally, that is where I would love to invest in gold. Right now, I wouldn't go and invest in gold. Again, not a recommendation that you do the same, but this is my method of looking at the charts, looking at the short-term trend and deciding where is the good entry point. Now, good entry point doesn't mean that you buy everything at the entry point itself. No. In fact, if you want to buy gold or any other asset, you have to stagger your purchase in few batches or in a SIP mode, whichever is convenient to you. So for example, if we go back and if I show you where would I go and invest in gold, here for example in 2018-19, this becomes my entry point, and from here on I would do SIP because you don't know can gold further fall or not, therefore you start doing SIP. Back in 2021 again, entry point becomes this, you start to stagger from here. If you see mid 2022, you start taking an entry here and you start to build SIPs here. 2020-24, 2020-23, there was a minor drop. Point is very, very simple. I take an entry when the gold prices have come down to 200-day moving average. I start building my positions in the staggered manner. Next 5 to 6 months, slowly I build positions. Right now, buying the gold, your choice what you want to do. I've presented you the short-term view. I presented you the long-term view. Both views you need to keep in mind. Never chase past returns. Never chase a hype. Never go behind the momentum. Always look at technical, always do some sensical checks before you go and invest in gold. Last point that I want to quickly cover is how do I personally go about investing in gold. So far, if you're liking this video, I request you to hit the like button. Let me know in the comments a simple thank you. You should also hit the subscribe button so that you can continue to learn with me personal finance, stocks, mutual funds, gold, various other assets. Also, if you want to get exclusive content, you can join my YouTube community. For example, just few days back, I talked about gold and gave the detailed breakdown note about gold so that you can learn in timely manner and also you can learn practically. The feedback of this community has been very, very good. You go to my channel, find the join button and be my guest. With that, let me now speak about how do I personally buy gold. My choice as of now is buying gold ETFs. Now there is an advantage of buying gold ETF and there is a big disadvantage of buying gold. Let me explain to you why. So the biggest advantage of buying gold ETF is that you can sell it through during the market hours. So for example, if I see that the gold prices may come down, I might just sell it off during the day hours and come back and withdraw my money. But when it comes to disadvantage, I have to show you some data. So let me talk about that in a minute. Also show you how do I go about filtering out the gold ETFs. What you see on my screen is simple screener of all the gold ETFs. There are 22 at the time of recording this video. First thing I do is I look at the last 3 months average volume, because whenever you're buying any ETF, liquidity matters the most. Why? Because liquidity tells you how many number of buyers are there, sellers are there in the market. So if I have to come out of the gold ETF, I know I'll easily find buyers in the market and on the exchange, I'll be able to easily trade it. So first is to look at last 3 months average volume and you can arrange it. So out of these 22, maybe I'll only focus, let's say the top 10, right? Second thing I'll look at is the expense ratio, because you don't want to pay a lot of commission to the AMC. This is because essentially all these AMCs are doing exactly the same thing. They are tracking the gold prices and giving you returns which are very close to the gold ETF. So you look at the expense ratio. Returns here wouldn't matter a lot. 5-year return, 1-year return, if you see very, very similar returns, 0.20%, 0.30% difference here and there. Therefore, have a look at the 3-month average volume. Now, even more important factor than the 3-month average volume is the difference between INAV and the actual price that is being traded on the exchange. This is where the gold disadvantage right now is coming into the picture, because there is a huge demand of gold ETFs. It doesn't happen every time. It is happening right now. What is happening right now? Let me show you with an example. What you see on my screen is one of the gold ETFs. For example, Tata Mutual Fund. Again, I have taken this as an example to show you the concept behind it. What do you see? What is the price right now? The price is 12.04 for 1 unit of ETF. What is the INAV, which is the indicative net asset value? It is 11.75, meaning the actual worth of this gold ETF is 11.75. But it is trading at 12.04, meaning you are paying 29 paisa more to buy this gold ETF. And why is this happening? Because there is a lot of demand in the market. Therefore, it is trading at a higher price. Now, this is happening currently. If you look at other ones, for example, Gold Bees or Nippon's ETF, the current trading price is 102.68, INAV is 102.43. This is also trading at slightly higher. That way you can go and compare. For example, SBI. Here, INAV is 105.32, it is trading at 105.82, even more spread here, right? And likewise, if you come down, I've done this analysis and I found one here, Invesco, which is trading at around 10,740.05 and its INAV is 10,753.24. This one is trading at a lower NAV value, which is excellent. But the problem with this one is the liquidity, because if I come back here and show you the data, Invesco has got very low liquidity. It is at number 20. The volumes are very low. Therefore, I wouldn't go for it. Point is very, very simple. Look at the top 10 by the 3-month average volume. Look at the expense ratio. Look at the returns if you want to. Again, there will not be huge difference. But more importantly, you look at the INAV, difference between the INAV and the actual price. Lower this gap is, better that ETF is in my view. Therefore, you can go ahead and do this by yourself. So in this video, I have talked about the long-term view, short-term view, and how I personally go about selecting gold ETFs in brief. Hope you like this video. Share this with your friends. Everybody needs to know the proper data, proper charts, and they make their own decisions. This is not a recommendation here, but I hope to see you in my next video. Until then, keep rocking.